Hello and good morning. Hello and good morning. How is everyone? How are you? I hope everyone is okay. Good morning. Kill the background music. Alright. Now the background music is killed. So welcome all. DJ Jackson, welcome. Today is another Monday where we focus on gold. So we're going to get right into it because I already see a setup forming. So this setup, or as always, we have to remind ourselves of the rules of the game, because every game in this world has rules, and when the players follow the rules, they are able to bring back. Welcome. So all the live sessions, we begin by mentioning or writing down the rules of the game. What are the rules of my game? How can you apply these rules to your own game so that you can also have favorable results? Now, I will just, first of all, before I outline the rules, because I can see the trade is forming, I'll just pull out my fib. So my expectation is that price is going to get to this level, then maybe we can see what you call a bearish engulfing candle, and then we can get in immediately. If we don't see a bearish engulfing candle, then that means we have no confirmation. If price goes above 23, this 23 level, then it means that also we are not getting into that trade. So let us begin. So what are the rules of the game? The first rule and the major rule for this system is that we have to take, always we have to check whether we have a concrete structure. That is, whether the market is going up or whether the market is going down. If the market is ranging, then we will observe from a distance until we get a clear confirmation by price breaking either sides. But before then, we shall not take any trade. But for today, we have a clear structure. So our structure is this simple structure which was formed from midnight today up to around let me use Kenyan time. So Nairobi, we put Nairobi, we use Nairobi. So this setup of ours was formed from 8:35 a.m. up to 8:56 a.m. and that is the structure we shall use. So we must identify the structure first. Once we identify the structure, number 2 is we pull our fib. We pull out our fib. And get it to between level 23 and 38. Number 3, we have mentioned this, that we must have what we call a bullish engulfing candle, or we call a bearish engulfing for a confirmation. So in our case, we are going to be checking for a bearish engulfing candle. And the bearish engulfing candle is the candle is one of the strongest candles. It's like a strong bearish order block. So a bullish or a bearish engulfing candle, for example, a bearish engulfing candle is where the bull candle is shorter than the bear candle by a big magnitude. So when we get that confirmation of a bearish engulfing candle, we get in. Now, when we get in, there are several other rules to follow. If momentum delays for at least 10 minutes, so price is approaching our level 46.70. Let us see how it's going to behave. If price stalls for 10 minutes, then we get out. Okay, that is, we have confirmed that we have a bearish engulfing candle. Then we get in, then price begins stalling because ideally a good trade should not waste your time. That is the principle behind this rule. So if it stalls for 10 minutes and we are in the 1 minute time frame, then time to get out and wait for the next signal, or to wait for what price wants to do, so that you can respond in accordance to price action being presented to you. So if price stalls for 10 minutes, we get out. What else do I want to know? Now we aim for our risk to reward. We always aim for a risk to reward of 1:4 or 1:3 mostly. So if we get in and the our trade idea begins responding to us, we have target. We target 1:3, 1:4, and not less than that. So we aim for a risk to reward of 1:3 and 1:4. So that is what we aim for. So those are the 5 rules. Now we have gold here right now. We are almost to our entry level. Now in fact, this is a setup we are always going to be looking for every single day. Every single day. Remember, in trading we want something which is repeatable, something which can happen maybe once or twice every week, so that you can compound maybe for a year, for 3 months, for 6 months. We want something which is going to happen maybe every 2 weeks if you are a swing trader. That is something repeatable and something you can bank on to grow your account. Okay, so we wait and see what price is going to do. Price today has a lot of momentum, and that's a good thing. Now when we get in, we have said we target 1:4, but we can also target 1:5. That is if price wants to go at least 200 pips, because sometimes it can go to 200 pips. Okay, so it all depends on whether price really wants to give us what we want, or price does not want to move. But all the same, it is us as traders who have the power. We have the capability of giving money to the markets or not. So if any of these confirmations are not met, then giving money to the market will be very wrong. So price is wicking inside our sweet spot level. All right. That's a risk reward of 4. 1:4, my friend. So my hand is already on the cursor. We're just preparing. So price is at our sell level. But we have to wait for a confirmation. We really have to wait for a confirmation. Now this will be the ideal place to sell. But we don't just get in because everyone is getting in. We wait and get that confirmation. Now ideally this will be the best place to get in. So alright. If this current candle closes See, the thing about trading is you must practice a lot of self-restraint. Alright, I'm getting in. I'm in. To me, this is already a confirmation. I'm already in. If price decides to take me out, no problem. But to me, this is a good trade. It's a good setup. It has worked before. So how many are listening to me right now? Can you guys see what is happening? You have taken our first live trade for today. Our first live trade for today. For the week. And the good thing is that the trade has begun responding to us. Immediately, we are in profits. I told you, a good trade will not waste your time. So, let us give it some time. Even 10 minutes to see whether it is going to... So the idea was for price to get to this, to a premium zone. We call it a premium zone. Okay, so it is not just a fib we are using. There is some serious reasoning behind the fib. So the fib provides what we call a premium zone or a discount zone. Now, not all the discount zones and the premium zones will be good, but at least majority, when you avail yourself, majority are going to yield some good profits. Some good profits. So we wait. It's a Monday morning. It might turn out to be a good Monday morning. There's no better way to start a week than to start the week in profits, than to start the week in withdrawable profits. My God. So we are going to give this trade at least, because it is already in profits, maybe at least 10 minutes or 30 minutes, 30 to 40 minutes to get to a take profit. But if it takes us out, there's no problem. Remember, this is a game of probabilities. So even if the probabilities are not on our side today, then tomorrow we are there once more. We are there. The same time, same system, same rules, same execution, same but different results. So the price is stalling, is now stalling for 1, 2, 3, 4, 5 minutes. If it continues to stall for another 5 minutes, I'll have to cut off this trade and then wait. Remember, what is helping me in this market is not my system per se, but it is my ruthless execution. If the trade does not start to give me profits in the designed time, then it means there's something wrong with the trade. And most times, when you go more than 15 minutes while still waiting for the trade and the trade is not giving you profits, this trade ends up to be a bad trade. Yet you could have cut that loss and allocate that money at a later session when the setup is aligned very well. So it's a matter of allocating your money to the best setups, which you don't struggle. One, two, three, four. So it is responding. It is responding. We shall give it at least 30 minutes. So when it is in profit, I'm not in a hurry to take it out, so I give it at least 30 minutes so that we can continue. We can see that we are going to get to the take profit. Take profit is around this place, at least. That's not greedy. That's not being greedy. Because if it has already gotten to this level, by today 8:54, it means it can also get to this level again. This is around how many pips? It's around 218. Yes, 218 pips. My other edge is my risk. Because I know I'm going to take a lot of trades in a week and consequently in a month, then my edge has to be in accordance to my risk. My risk has to be in accordance to my confidence. and my capital level. So if my capital level is not very high, then it seems that this trade is going to go against us. Alright, it's about to take us out. So if price closes above price closes above 46.72, because that is where my stop loss is, because I believe my stop loss is around here. I believe that a good trade will give you profits immediately. So if it does not give you profits immediately, then there is something wrong with that trade. How many are we? So 10 minutes are almost over. Can you guys see that this stop loss is this stop loss is almost being hit? So based on my rules, I should be already out of this trade. So I'm cutting my losses right now. I'm cutting my losses right now. So now, after cutting my losses, so what next now? So the next thing, the next action, the next logical thing to do is to wait for price to give us a clear hand. What do I mean? This level which I got in, this is what we call a sniper entry. A sniper entry, or a very clean entry. But if price refuses to react to the sniper entry, my second course of action now is to wait for a clear break of market structure within the structure. So that means I wait for price to break below, and then that is when I'll get in. Otherwise, this trade idea has been nullified. Whereas price is not breaking the 23 level, it has stayed for so long without giving me profits. As we said in the beginning of the session, if price stalls for 10 minutes, we get out, because these scenarios are, when you backtest and then you find these scenarios very many times, then you automatically know that even if the trade idea is good, but price is stalling, then it means that's a signal. It may not be a profit signal, but it's a signal telling you to get out. Okay? And you have to be serious enough to cut that trade very fast, so that you can now prepare for the next trade immediately. For example, I've already cut that trade immediately. I got in at around what time? 9:24, and by 9:34 the trade idea was still not giving me profit. So the only logical thing to do based on my rules is to get out, not to adjust my stop loss, but to get out immediately. So the next course of action, if I am to continue with the same bias over sell, is to maybe wait for price to break below. Or if price is going to break above, now I will start looking for, what do we call them? I will begin looking for other entries to the other side, that is to the buy position side. Alright, so it's a matter of making decisions very fast, sticking to those decisions, then adjusting, so adapting very fast You don't have to think about it. You just adapt. Based on what the market is, the information the market is providing you, you adapt and adjust very fast. Now, the only good thing about this system is that at least it is going to alert me when I need to get out beforehand. Okay, so if price begins stalling, I know that's a signal, because good price action or good trades which I've taken, or A setups which I've taken over the years, or I have back tested, they don't waste your time. They go immediately into profits. And that is why we are told that the best loser always wins, because the best loser means that this trader has clear rules for losses. He knows when to get out. He knows how much risk to put per trade. He knows how to take a loss very fast, and he also knows how to adapt very fast to the results, to the loss, because many traders fail at adapting the loss. They try to change the system, they try to change the markets, they try to force other trades. But the good thing is, if you understand and you know that your strategy is going to provide you entries for 5 days, then one lost day is not a very bad thing. Okay? So price is still at the level 23 and 38 level, which is a premium level to sell, but price seems to be going on the bullish direction. Do we have any choice? We don't have any choice apart from to wait now. So what I'm telling you is, immediately you get in, you would expect to make profits within 30 minutes, 40 minutes, or at most 1 hour. If beyond 1 hour you're still waiting for price to go your way, then you should get out and then recalibrate once more. But all these decisions, you have to prepare for them before you get into the market. What we call pre-market preparation, where you check the structure in the morning, you decide where you're going to get in, you decide how you're going to get out, okay? You decide how you're going to add more to the winners. For example, right now, if I would have waited for my full stop loss to be hit, I would have lost 3 times what I have lost right now by just getting out using that signal which price has given me. So price has given me a signal. As I told you, my signal is if price begins stalling for at least 10 minutes. Sometimes I'm very ruthless. I give it only 5 minutes. So if it is not giving me profits in 5 minutes, then I already know that this trade idea has a problem and it is wrong. So that is going to save me money. So instead of losing my whole 1%, I may lose maybe 0.3% or 0.25%. But when I get a win, I get a huge chunk. I make at least 3% or 4%. And that is the whole idea of trading. You lose less, you win more. if I lose $250 per trade and then I make 1,500 for a winning trade, or even 2,000 or even 3,000, then my loss, even if I get 10 losses in a row, only one trade is going to be bringing me back to profits. 2 trades, I have twice the amount I risk. Okay? And this is how your psychology now develops, slowly by slowly. Because for your mind to respect the rules must make sense first. And for the rules to make sense, that is these rules here, for these rules to make sense, they have to have been tested. So you have to ensure that your mind has been passed through, you have gone through that back test. You have witnessed for yourself that indeed level 23 and 38 is a good level. Indeed, if price stays for 10 minutes, it's a bad trade. Indeed, price will always give me 1:3 or 1:4. So if you do that for a huge back test, maybe 100 trades, 200 trades, now that is where your psychology begins to develop, because you have clear rules of engagement. Okay? But if you get into the market, you start looking for setups that time. Then you'll be in panic mode always. So my current action right now is to wait, because I have enough room to go in. And by enough room, I mean I have more. Well, I have told you I have not lost what I had risked. So I wait. If I get a good setup, I get in. If I don't get a good setup, now if I see price has broken our level 38, which is our level, our area of interest, which is where we wanted to do what? To get in. My thought process is usually to go in the direction where price action is going. But when I think about it sometimes, for example, right now, price is telling us that we are headed for a bullish scenario. So the question is, should I get in or should I not get in? Can we refine the stop loss now? What do you mean, Haron? We cannot refine the stop loss, because if the trade idea, if price went above 23, it means that our bias has been proven wrong. Okay? What do I mean? So our bias was a sell this morning, and in fact price began by respecting that bias a bit before it started stalling. Now I have no problem when price stalls around level 23 and 38, because maybe it is collecting more liquidity at that level to go in our direction. But once price breaks that level, it breaks level 23, it goes above, then it means that trade idea has been invalidated. So once your trade idea is invalidated, now you don't get hurt, you don't feel bad. You recalibrate and you re-strategize again. So now the question I'm asking myself is, because price has gone above 23 level, so my next question is, does it mean that we are going up? And if we are going up, what will be the best entry for a long position? So that is a question I'm asking myself. So many times I don't like taking these trades where I had an initial bias, then after my bias was invalidated, now I change my, well, it's a good strategy all the same, because it means you are adapting faster. But I don't know. I'm not very confident in, I like having my bias. Once my bias is invalidated, now I just observe the markets. Okay? So based on this new structure, now the best level to get in will be, that is, if we are going for a buy now. If we are going for a buy, the best level to get in will be this level now. Okay? And this buy is based on the idea or the belief that since price has invalidated a clean 23 and 38 level, then it is me as a trader who was wrong. That means my bias was wrong and the market is buying. So the next question is, you need to ask yourself is, should I buy or should I just observe the markets? And if I am to buy, if I am to observe the markets, there's no problem. That means there's no risk. But if I am to buy, now we have two questions here now. No, we have only one question. Do we get in right now? Do we wait for price to get to this level here? Or what do we do? So for now, me, I'm on the side of observing. I observe. I wait for maybe price to get here. Yes. So this level, which was our sweet spot level or was our area of interest level, now becomes our new support. And it is good you guys are seeing this strategy working in real time. If you have followed me from last week, we had 8 days when we won. We had days when we never took trades, and today we have taken a loss. But it's a loss. It's a calculated loss, because based on our rules, or the rule of the game which we have set for ourselves, one of the rules was that if that trade stays for 10 minutes without giving you profits, you get out. You don't ask why. You don't even think about it. You don't even give that gold chance. You don't even give gold a chance. You just get out. That is what means. That is what we mean by following the trading plan. And that is why your trading plan must be written every day when you wake up, so that you cannot confuse yourself or start thinking. In fact, when you start thinking, that is why you go wrong. You don't need to think about anything. You just need to follow the rules which you have written, the rules of the game. Because when you start thinking, then you start involving your emotions through overthinking. That is, you start involving fear, you start involving anxiety, you start involving overconfidence, you start thinking is the problem. Thinking is usually always the problem. I can see price is trying to retrace back. So I have taken this low, which was formed maybe a few minutes ago, and this new high now. So if price is able to get to this level here, we could observe what is happening. But I will be more confident. I will be more confident if price, well, it seems to have broken this level. It seems to have created a break of market structure. So we could term this structure as our new structure now. So if price is able to get to this level, maybe we could consider going in for a buy. As I said, write the rules down, follow the rules without thinking. Once you take a loss, strategize or observe. There's no two way about it. So strategize or observe. And those two decisions of whether to strategize or observe are made by your capital. So if your capital allows you to re-strategize and get in again, you have to do it. But if your capital for the day or your risk allowance for the day does not allow you, then you observe. It's good to observe. There's no problem with observing, because you are still logging in your 10,000 hours. Remember, to be a master in any field, you need at least 10,000 hours. 10,000 hours, and trading is not different. Okay, so 10,000 hours is around 7 years if you commit at least 4 hours in the markets daily. So observing is part of building it's called crystallized intelligence for the markets. So crystallized intelligence is the experience you get from your life, from how your life is, from the experiences of your life. So you also get crystallized intelligence from observing the markets for many hours. So right now what we are doing is observing the markets and observing whether our hypothesis that once our levels are broken, whether we can get in the opposite direction, and if it will be a good idea. Okay, but if we don't want to risk, we do what? We observe. And this is how you're able to take losses without making them too big. Because the only reason our losses become big is because of our emotions. We have let our emotions take over. Okay? So right now I lost on that trade. Now I will want to go back in again. I want to get. Now when you start thinking like that, in less than 3 months, you'll not have an account. But before you get there, always remember rules of the game. Every game has rules. Even trading, even if trading only 5% are winning, there are rules to the game. But the problem is that we want to invent our own rules. Why? Why do we want to invent our own rules? In school, there are rules. In prison, there are rules. In church, there are rules. In workplaces, there are rules. In trading, there are rules. But the good thing is, you can create your own rules, which you are going to follow. you impose your own rules. So your own rules protect you against yourself, against your emotional self. And that emotional self is what brings drawdown. Well, apart from focus, number one is usually focus. If you don't have focus, you lose for very many years. Now, if you have focus, number two is usually rules. If you don't have rules and you list down your rules on a daily basis, then that is usually the second problem. Because if you don't have rules, now you begin making your own rules inside the market. That is what you usually do. You begin making your own rules. You begin by saying, okay, let me adjust this stop loss because this trade looks like it's going to give me profits. But remember, you have invented that rule in the market, in the live market. So that rule is not very logical. Even if that trade goes your way, it is not very logical. Or, this trade looks like it's a good trade. Even if I said I'm going to wait for 10 minutes and get out, let me give this trade some more time. Oh my God. You see, it is like dating. You can be dating, then you start to see the red flags. You can clearly see these are red flags, but you hope that this person is magically going to change over time. And you know it will not happen. It never happens. It will never happen. They will never do that. Just the same case for this trade. If you give it even 11 minutes, it will not give you profits. It will take you out. You will get angry. You will revenge trade. Whereas it had given you a signal, get out, get out. This trade is not going to go your way. And instead of taking that good signal and taking that small loss of $246, okay? Now, instead of taking that loss of $246, your loss becomes $1,000. Yet you had a signal, a good signal. Get out. Get out. Okay? Now, I don't want to talk about losses too much, but I can also add on the winners. When you have a good winner, you get in, and in 1 minute, you're already in profits. You're already in profits. So now, what is going to stop you from adding to the profits? What is going to stop you? So the market right now, the way we can see it, is stalling, and the only winning move here, the only winning move we have here is to continue to observe this market until we get a clear structure of what maybe is happening. For example, if it is going to break this big break of structure, maybe I'm thinking that because today we opened with a gap, that it wants to fill maybe this gap. Okay? Maybe it wants to fill this gap. So price today opened with a gap, a very clean gap. And as we know, gaps have to be filled. But remember, we are operating in the 1 minute time frame. So ours, we don't care about gaps, we don't care about other structures. The only way this gap is going to help us is is if there's going to be a structure around that place where we can get an opportunity to get in. Okay, otherwise this gap is only useful to those people who are trading 1 hour time frame or even 4 hour time frame. For us, the only use of this gap is if this gap is going to give us a structure, and that structure is going to give us an entry, and that entry is going to give us, and that entry, by the way, in fact, this is a very I almost forgot. This entry has to be in the sessions. So for example, my session from 9 to 10 a.m. no, to 11, sorry, to 11 a.m. that is London session. Okay, now from 11:30 to around 3 p.m. or even from 12, we can even put from 12 to 3 p.m. That's what we call lunch time. Now I cannot take trades during lunch time because of volatility, but from 3 to 5 we have what we call the New York session. So if you want to trade both sessions, that's okay. But for the best sessions, I would like you to take trades when you are fresh, and you are normally fresh immediately when you wake up. Now, if 1 hour passes and price still has not given us what we want, now I also begin disengaging mentally. So in all my live sessions, you will not hear me blaming the market, that the market did this, the market did that, the market did. Yes, the market might be doing what? Might be ranging, but it is you as a trader who has the power to strategize and know how you're going to be trading in that ranging market. It is not for you to blame the market. It is for you to strategize once more, strategize, and then come with a plan how you're going to now to, okay. For example, on Friday, if you are live with me on Friday, we took a very good trade. Not on Friday, on Thursday, we took a very good trade, and I'm hoping this week we are going to have at least 3 or 4 like these ones. A very clean trade, immediately get in. So this is the way this trade. This is the trade which got me out of drawdown. I was in a very deep drawdown. But this single trade, I risked more than I should have risked, but it paid off. So this trade was very good. It was hit within 15 minutes, but then I only took 125 pips out of the 400 pips. So as I keep telling you, a good trade will not waste your time. Okay? So this will be our area of interest right now. Area of interest from this level to this level. Then we get a sweet spot here. Then we wait for price to give us a confirmation of a bullish engulfing candle. Bullish engulfing candle. So you can see you cannot control yourself, you cannot control the market. You can only control yourself and your actions and your behavior during the market session. So price looks as if it wants to come back to area of interest. But if it does not come back to our area of interest, now we end the game there. We come back tomorrow. We continue playing the game. But as I've told you, the most important part of the game is understanding you as the player. What are your rules? And what is going to protect you? And the only way to understand and the only way to be protected is to fully understand your enemy. How does your enemy think? What's the signal your enemy is giving you? Okay? How to take advantage of your enemy in the best way possible? Right? Because only when you learn your enemy, and then you learn more about yourself. And the only thing to learn about yourself is whether you are suitable to trade in the lower time frame. If you are okay trading the lower time frame, that is, your personality is not suited for a swing trader, then you already have an edge now, because you know how to play the game, you have your rules, you know the enemy, you know how the enemy reacts to certain conditions, you know how to protect yourself, you know how to add to your winners. Then it becomes a game of repetition now. You repeat the same thing over and over and over and over and over again. Okay? So this is not a matter of guesswork. This is a matter of us accumulating as many samples as possible, screenshotting these samples as I have showed you before. So whenever I feel like now the strategy is going is not going to serve me the way I want, I look at these screenshots of the days I have been winning, of the days of all the days I caught good setups. Then I remember, I tell myself that it is me who does not want to be patient. Okay? So your mind needs proof always. We call it proof. Others can call it assurance. Others can, whatever you call it, or affirmations. So you need to affirm to yourself that whatever your strategy you are using is the same strategy you are going to use when you are managing $500,000, when you are managing $1 million. The same strategy, the same argument, the same rules, and the same psychology, and the same focus. Okay? It may seem boring, but now this is how we make our money. This is how we make our bread in the markets. Okay? It is not so different from an office job. The only good thing is now we have our own set hours, and we don't have to be in the office for the whole day. Okay? But rules are a must, and you must write those rules. You must write those rules on a daily basis. You read them, you think about them, you dream about them, you write them on a paper, you write them on your palm. You have to keep on reminding yourself. And when you start having doubt, you go back to your evidence and see the days which you are winning. Then you tell yourself, all right, I'm in the right place. Because if you don't do that, you'll find yourself now jumping to other currencies, jumping to other systems, just jumping. And it is not your fault. It is because this market can make you run mad. You can run mad, my friend. So the only solution is for you to be harder than the market. If the market tries to be hard, be harder. That it cannot penetrate your mind. The market cannot annoy you. The market cannot provoke you. The market cannot do anything to you that you don't want to do yourself. Some will call this mastering yourself. Some will say that this is now knowing yourself. But to me it is just having rules and following those rules and then winning. Okay? So even if I have a drunk person here, I'll just not a drunk person. Because if you are drunk, then you cannot be focused. Even if I take a street person and then I give them these rules, within 1 year, that street person will begin making money. It is not that street person knows themselves. It is just rules. And the rules for this game are to protect me and also help me make money. Okay? For example, right now I'm very happy because I would have lost $1,000. I would have lost $1,000 on this deal, but I caught that loss early. I cut it out. So as I end, you might wonder, what if I cut out a loss or I cut out a trade and then that trade goes in my way? Now, a long time ago I used to feel very bad, but now I have learned to trust my rules. So whatever happens after, that is none of my business, because I already made the decision and now I'm going to stick to that decision. I don't know whether you guys are understanding me. The core of trading is you having a set of beliefs which you know, a set of beliefs which are back tested, which are proven to you beyond doubt, and then you trust these rules now. If you have not yet gotten to that level, then your trading will be a bit chaotic, because the market is always going to provoke something in you for you to do something. Okay, you may have a strategy, but because you don't fully trust the strategy, the market will keep provoking you. Okay, so you have seen for yourself that today we have taken a trade, we have managed that trade, and we have lost that trade, but we have not lost as much as we would have lost if we allowed to the trade to play out. Majorly because we have a lost signal. So this lost signal gives us information or a clue to get out before we are taken out for the full profits. And this will help you especially when you are over averaged, because sometimes, you know, I cannot lie to you, sometimes you are very confident in a trade. Okay, sometimes you are very confident, you want to risk even, you don't even risk 4,000 you want to risk even 30% of your account. There's no problem. Okay, I cannot judge you. All right, I will not judge you, because at the end of the day I've also done that. Now this loss signal will give you a signal to get out if that trade is not good. That means you'll save at least 30% of your account. I hope I'm talking to traders here, because some people might think I'm talking about gambling, but this loss signal technique gives you an opportunity to get out in case in case you had over-averaged yourself. So if you had over-averaged yourself by 30%, you are able now to get out comfortably and quick with a small loss as you wait for the next opportunity. So what we shall do, we are going to wait for the next opportunity. Perhaps tomorrow, not tomorrow we have to be there. So perhaps today in the evening, but tomorrow we'll have to be there. So thank you for your time. I hope you have learned something, and I hope this stream was of use to you.